From Carnegie Hall, Friday, November 3rd. Ladies and gentlemen, Louis Rukeyser.
Thank you very much. You can't imagine how encouraging it is for an aspiring young performer to get this kind of reception. One of the oldest jokes in this town has a visitor asking a New Yorker, "How do you get to Carnegie Hall?" And the New Yorker answers, "Practice, practice, practice." Well, my friends, I thought tonight that after 30 years of practicing, I might be ready for my Carnegie Hall debut. When Wall Street Week first went on television in November 1970, it was not only the first national television program about money, but I was then the only national economic correspondent or commentator on television. And now, Maestro, please tell the rest of the orchestra to warm up backstage. Their big moment is coming. But first, let's see what kind of music they were making this past week in Wall Street. The Dow Jones Industrial Average helped us celebrate by making it 3 winning weeks in a row, overcoming Friday jitters as bonds took their worst hit in nearly 4 months after a report that wages rose more than expected in October, thus dimming hopes for early interest rate relief from the Federal Reserve. For the week, the Dow gained another 227 points, making it 625 in the past 3 weeks, to close over 10,800. And not even the dire prospect that one of the current presidential candidates might actually get elected next Tuesday could stop all our broader indexes from joining the party, with the technology bellwether NASDAQ enjoying its best week since July. Most of our elves, who are resolute, if nothing else, insist that the Dow will gain more than 5% in the next 3 months. Now let's say hello to 3 special guests and friends who are among the most powerful people in the world of money. Richard Grasso has been chairman and chief executive officer of the New York Stock Exchange since 1995. You may have seen us on TV earlier today when, thanks to his expert guidance, I rang the closing bell at the NYSE without shorting out the electrical system and bringing world finance to a complete halt. During that ceremony, we were joined by the longest-serving chairman of the Securities and Exchange Commission in history, Arthur Levitt, who's been the SEC's chairman since 1993. Sandy Weill is right at home here in Carnegie Hall. He's the chairman of its board of trustees. In his spare time, he's the chairman and chief executive officer of Citigroup, and a member of the Wall Street Week with Louis Rukeyser Hall of Fame. Gentlemen, let me start by asking each of you, what is the most important development in the financial arena of the past 30 years? Dick?
Well, Lou, first, congratulations on not shorting out the system. And let me say, I think it's the democratization of ownership. Realize in the course of your 30 years, Lou, we've added 50 million investors to the marketplace here in the United States. It's truly been a merger of Main Street and Wall Street, and that proliferation of ownership, literally to every household, either directly or indirectly, has brought about, I think, the strongest change our markets have ever experienced.
When we went on the air, there was no such thing as NASDAQ. How has that changed your life?
It's made it a bit interesting. But I think America is very fortunate to have 2 very strong markets, each with very different focus, but each designed to serve the capital needs of some wonderful companies and some 50+ million new investors in our nation.
I think the most exciting development has been the empowerment of the individual investor. It's incredible how the focus in our markets have shifted from institutions and corporations to individuals, both in terms of products, in terms of regulation, in terms of information. We've got the best informed investors in the history of this country.
Sandy, you've helped change the last 30 years. What do you think is the biggest?
Well, I would say two things, Lou. First, at the beginning of the 30-year period, the stock exchange changing their rules to allow brokerage companies to go public and have access to the capital markets, and Arthur and I having a company then that was able to go public and be able to grow through the 70s. And finally, at the end of the period, the Financial Services Modernization Bill, which was just passed a year ago, that allows for functional regulation and allows banks and brokers and insurance companies to be part of the same entity that enables U.S. companies to compete on a level playing field with our foreign competitors.
Your merger that created Citigroup would not have been possible even 5 years ago. When we went on the air, banks couldn't pay market rates of interest. They had regulation Q limiting what they could pay out. Are we going to have any more changes, freeing up more regulations, you think, in the future?
Well, I think that we've seen, really the advantages of deregulation all around the world, with other countries copying what started here in 1975 with the end of fixed rate commissions, and how that's really added to the volumes on the various exchanges around the world. And I think that we are in a period where companies are copying the capitalist system. They're privatizing government-owned businesses everywhere. They're privatizing pension systems, and it's just a fantastic time to be in the financial business and have the opportunity to participate in this global growth.
The workers of the world united and said, give us our stocks.
Give us our stock options.
Dick, what's going to change most over the next 30 years?
Oh, I think Sandy's right, Lou. It's just started. The world we live in today, internet-driven, ownership-based, and certainly a time when countries around the world are modeling this wonderful system we've enjoyed in our great nation. The dawning of an empowerment period of investors, both here in the U.S. and around the world, changed by technology, changed by the desire to raise standards of living, and basically driven by a free world, an extraordinary time of opportunity.
I can't wait. Art, what do you think is going to change?
I think we're moving very rapidly toward globalized electronic markets. And I think a lot of the products that we're seeing being offered to the public today will be consolidated. I think some of the products make no sense at all. Others make infinite sense, and I think there'll be a turnover in terms of what the public will be offered.
Want to name a couple that don't make sense?
I suspect futures on individual stocks.
You think they'll disappear?
They haven't appeared yet.
Sandy, look in your crystal ball. You are a great mover and shaker, and you've always looked ahead. What else is going to change?
Well, I think the trend that we're in toward, globalization and products and services going to places where companies can be the low-cost producer will continue, and that will continue to encourage consolidations and mergers and efficiencies really developing all over the world so that we can import efficiency, and the internet is going to drive that even faster.
We're nearly out of time, but the globalization you've just advocated is opposed by many labor unions and others. Speak to them.
Well, I think that the labor unions were opposed to NAFTA. They thought that we would lose a lot of American jobs to Mexico. And what's happened several years after NAFTA is Mexico is doing great. The U.S. has full employment, and that has to be very good. And I think the same thing will happen with China.
China's going to join the Western economic system?
I think that we're better off having 1,300,000,000 people as part of the system following our rules than outside the system.
And we want every one of them to be viewers every week.